Morning all. How are you all doing? Morning Ian, Wayne, Martin, Mark, Day Trader, Christian, Amy, Gregor, Figinia. How are we doing? Happy Monday. Back again. Busy week this week. Loads of news this week. Literally every day is just like solid red. So it's going to be a busy one. We will see what happens. But loads happening this week. So one of those weeks where you can either make a fortune or lose a fortune. Morning, Tom, Rajiv, how are we doing? We'll start off with news. The weekend, haven't had a lot of news over the weekend. Couple of bits came out that I spotted this morning, not massively impactful, apart from what's just happened to the yen. Goldman Sachs now expect the Federal Reserve to deliver their first rate cut in Q3 2024. We were talking April. So I don't know where that's come from, but I don't think they're going to wait until Q3 2024. We've got people like the euro talking about going early next year. The pound potentially now. They're not going to wait that long. I don't think. So I'm not quite sure why they've said that. I don't think they'll be waiting and forecasting that, but I don't know. That's what they say. But the interest rate, rather inflation figure for the US is now down at 3.2. Target is 2. So another 6 months plus, that's going to be too low. So I don't know. We'll see what happens. But so we've had that over the weekend. This morning, Bank of Japan just said that they are not going to change rates this year. Market's gone mental. Doesn't make any sense. We know that. They've said that already. So, this is just one of those knee-jerk reactions. We know you're not going to do it this year. You've already told us that. So telling us it again, just pointless, isn't it? So market's just had a massive spike up on the back of a news item they know all about already. So just complete knee-jerk reaction. That, ignore it. So it's big candle gone in, not massive, but just a bit of a big candle. So that's it. All weekend news. So nothing else exciting there. So we'll see what happens this week with everything. I'm going to play it by ear this week. It tends to calm down. Definitely next week will be not tradable, really. I'm not going to trade next week. This week, I'm just going to play it by ear. I'm not doing any position trading this week. So I've turned the EAs off. I've just got that one position on the Euro CAD, which I'm managing at the moment. So I'm going to close out about 5% for December and then start again in January. But I'll carry on trading the indices this week until it gets to the point where we are just not going anywhere. So if the market isn't moving, I'm just not interested. I'll come back in January. So we'll see what happens. But this week, likely to get a lot of movement. So we've got 5 minutes to the open. So the Aussie, basically, we've got news this evening. We've got Bullock speaking. That's it for today. There's nothing else today at all. So today is a no news day. Market may or may not decide it wants to do anything with that. So there's no timed movements that we're going to get, though. So kicking off tomorrow, we've got the claimant count change for the pound. And then we go into the CPI figure, so the inflation figure for the US tomorrow afternoon. So this is the big one, the first big one, inflation. So we want to see if that inflation number is going up or down. We've then got the GDP for the pound. So again, news is like very early, super early, obviously overnight. But again, very early news. We've got very early news. So the news, obviously, we've got high impact Asian news with the Aussie. We've got high impact London or European news around about the open of Frankfurt. Then we've got high impact news just before or just after the New York Open every single day. So it's a big week. So the PPI figures after the pound on Wednesday. Then we've got FOMC and the Fed fund rate. That's not changing. If that does change, all hell's going to break loose. It's not going to change, he says, as they decide, actually, we'll go to 5.25 and the market collapses. But yeah, not going to change. But that's the important bit, the statement. We're looking for the FOMC statement to tell us what timings we're going to get. So Goldman Sachs are now saying they reckon Q3. Statement will give us a bit of forward guidance. Then we've got the press conference. Well, hopefully Powell will give us a little bit more of a hint. So going to be a big one on Wednesday. GDP for the New Zealand dollar then overnight. We go straight into the unemployment rate for the Aussie. Then we've got the Swiss rate. They do drop clangers every now and again. They decide to change the rates and not tell us about it. They never tell us anything, the Swiss. That's why that is so important, because when they do tell us something, the market really listens. So it might be a bit of movement on the Swissy on Thursday, probably will be. Then we've got the rates for the pound on Thursday lunchtime. Then we've got the rates for the euro an hour later. And then we've got retail sales for the US. And then we've got the ECB press conference. Thursday is just press a button and cross your fingers, basically. Pay your mortgage off day, basically. It's going to be huge. Three rates and an unemployment figure on the same day. It's just going to be nuts. So that's Thursday. And then Friday, we move into PMI. So it's PMI week. Friday, we've got all the PMI figures coming out. So, yeah. It's going to be fun. We'll see what happens with the DAX this morning. There's not any news, really, that I think is going to impact the open specifically today. The Friday close was high again. So another up day on Friday. This DAX is just off the planet at the moment. Upside, you just can't pick a top on it. So, yeah, we've gapped down today. So we're playing a gap down today. So obvious target to the upside is very simple. It's a gap fill to start with. Following that, we're going to look at last week's high, which is Friday's high. Downside, we've got this area here, which was a high point on Wednesday, the high from Thursday, which we tapped into and rejected initially on Friday as well. So this previous day's high might come into play today to the downside. Failing that, you're looking at ADR, which is below from Friday. So, yeah, interesting. But, the market hasn't profit taken this entire move. They're just not getting out of the stocks. Everything's going into stocks. It's crazy. We normally have a Santa rally in December. We've had a Santa rally throughout the entire month of November. And so far, December, we haven't stopped. Santa rally typically starts this week. We get a Santa rally this week. Just hold on to your hats. If you press the buy button now, you can get out of it Christmas Eve with an absolute fortune. But we didn't get a Santa rally last year. This market is not as it used to be. So we'll see where we go. But yeah, certainly due a catastrophic drop. It's one of those where if you do see the thing collapsing really, really fast, do not get out. Stay. Because if you do get that pullback start, it could be an absolutely astronomical short. So just got to be careful if the market does drop quickly, especially on news this week. We've got tons and tons and tons of news that's going to affect the DAX and all the US indices. So when they actually kickstart a move, the markets will look at that move and go, yeah, probably time we got out as well, boys. And obviously then it comes down like a rate and knots. So we'll see what happens. But there you go. There's DAX pre-market. That jumped down really quick. No trade for me anyway. So pre-market, too tight pre-market. So we are 12 points. Minimum I'm looking for, which is 10% of ADR, is 13.6. So there was no pre-market range for me today to take. So I'll be taking the 5-minute opening range. Quite a lot of volume coming in this morning, which is good. So we see where we go after the 5-minute range has gone in. But yeah, who knows this week? It's going to be one of those weeks. Morning, Kennelly. Morning, JC. FX-wise this morning, wrong one. Platforms around the wrong way. FX-wise this morning, there's two ADRs, both caused by that yen spike that we've just had. So your Swiss yen has just hit ADR. That's pulling back on the leg from last week. So anybody that did get in on that mean reversion that I spoke about, well done. It wasn't easy though. wasn't easy to get in, and it wouldn't have been easy to hold it because you had a hell of a pullback after an entry, but it is paying out now. So watch that area and that area. So 150, 175 ADR to the upside. It's just impossible to pick a direction on this yen at the moment. When they do announce that zero interest rate, it's going to take off big style. So still don't want to do anything but short this, really. So that is a nice short entry. Obviously, we're at ADR. Wait for a reverse alert, M5. Wait for sellers to kick in. And the pound yen also has hit ADR. There's no reverse alert available on that at all because it's all the way back down here was the last batch of sellers we had. But that's an ADR as well. Same thing. We're pulling back. Watch this low, basically, which is 200 ADR. So nice time to start to get in shorts if you do want to hold anything over Christmas. That will be a decent entry. So those are your two ADRs today. We've got monthlies already hit, but as we know, these monthlies are all yens. Yeah, so these have all played out. So you were in these on Thursday, Friday last week, and you're in profit on them if you took them. But too rich for my blood, basically, at the moment. But we'll see. DAX slowed down. So all we've had really is a break to the downside attempt, but not really gone anywhere so far. 2 more minutes left on that. Your RSIs are totally flat today. There's nothing to look at on RSIs. It's been a really, really, really quiet week. So obviously last week, even though I turned the EA off, I think on Thursday last week, didn't take any new positions last week at all anyway. Nothing got extended apart from yens last week. So there was no entries for me last week anyway. So yeah, it's quietened down. The market's moving, but it's not moving much. Everything is being focused on the yen at the moment. So, morning, Agosa. Morning, Robert. Morning, Evil. Good morning from Financial Juice. Bank of Japan said to see little needs to end the negative rate in December. Yeah, already covered that. All right, just waiting to see what happens in the next minute on this. Morning, Mumo. Morning, Ryan. Morning, Weird Dad. No, not going to ask for a photo. Anyway, you can put one in Telegram if you want. Right, waiting for a break. So this 5-minute range today, I'm not even sure if this is big enough, is it? I'm not even going to get in on this today. Look, 134, need 136. Don't think there's going to be a trade on the DAX this morning. US indices not really doing much either. Very, very, very tight ranges today. Yeah, no trade on the DAX. So if you do want to take the DAX opening range break, obviously that would be the most sensible trade, I think, this morning. There we go. You would be triggered long. And then try and get out there, really. So there's your 2R on that 5-minute ORB, which is the gap fill. Perfect. So try and trade it up into the gap fill this morning. Then you're done. So no trades today. It's going to be one of those weeks today. I think it's either going to go absolutely crazy or it's just not going to move. It's going to be a grindy one, which is dangerous, which is why I'm kind of considering not even bothering this week because historically all slows down dramatically. So I've got nothing much else to cover today. because obviously there's only a couple of ADRs off the back of that Swissy. There's no RSI extensions to look at on 4 hour or hourly because they've all played out. So if you got into them, you already profit on them. And obviously the DAX, there's no trade. So it's going to be a quiet morning. So what I will do, we'll have a look at the news basically that we've got coming out this week. And we'll have a look at the pairs, obviously, that the news is going to affect, which is pretty much everything. And then see where we think things might be going this week. So if you want to trade, if you want to trade this week, the best thing to do if you're position trading, obviously you've still got to manage your positions that you're in if you're position trading. Probably the best way to make money when the market is starting to slow down is on news. So trying to get into positions on these ahead of the news. So the best way to trade news, which is counter to what everybody thinks, is not to try and straddle the news just before it hits, or wait for the news to happen and then try and figure out whether it's going to do that or that. The best thing to do that I've found is basically just get into a position before the news in the direction that you think it's going to go. Yeah. Because then you've got either a really fast, easy, quick money, or you've got a stop out. So it's very easy to control your risk reward. And it's basically using stops, obviously. So you are literally flipping a coin, which is what all trading is anyway. So, so looking at what we've got coming up with all of the news this week, if you just pick the majors and look at the majors, and look for basically trend continuations. So at the moment, obviously, we know, let's start off with, what have we got coming up with the Aussie this week? Bullock. It's the unemployment on Thursday and New Zealand's GDP, isn't it? That's all we've got for the Aussies. So with the Aussies, basically at the moment, wrong one. The consensus for the Aussie is short. CPI has come down at a decent rate. They're starting to make headway into this. It's still the highest out there, and they haven't increased the interest rate again. So it's kind of negative for the Aussie, the outlook moving forward. The New Zealand dollar, very, very similar. So there's no advantage on Aussie or New Zealand. But at the moment, as you can see, it's kind of up, down, up, down, up, down, up, down. So for me, I'd be looking more for a move down to fill that propulsion gap this week at some point. So depending on where it is, if we haven't got down there, I'd be looking for shorts. If we have got down there, I'd probably be looking for a pullback. But if you look at all of the Aussie pairs at the moment, they're all kind of sideways, all kind of weak, apart from obviously everything against the yen. The big telltale is the Aussie New Zealand. So whenever there is a, with the Aussie and the New Zealand, because they obviously move together, you can tell which one is the worst by looking at the Aussie New Zealand. And obviously, as you can see at the moment, it's the Aussie. So again, with all of these, either looking for market to come up and hit these propulsion gaps, or if we're in those propulsion gaps, looking for the market to push back away. So we're just looking for normal market structure to continue, really. So any of these pairs, like Aussie US, if we're sitting around here and we're just about to get some news on the Australian dollar, I'll probably go hit a short, get out somewhere around about half an ADR and hope that we come back down and target this propulsion gap. If on Thursday we're down here, I'll be looking for a long for them to get out of that move they've just made into that propulsion gap, because we know there's potential for buyers to enter new positions there. So just looking at propulsion gaps really on all of these, but making decisions based on when we get to those news events. So trying to get in sort of a few hours beforehand, really all you can do at the moment. If you're going to enter any positions, obviously, just trade as normal. But what you're going to find is this week and probably going into next week, there's going to be a lot of movement like this, but not necessarily that. So the RSIs, you might find you get extended on a spike, which we've had a few times, and you're not going to get an opportunity to get in because there won't be a reverse alert, because the move will be so fast and hard because there's no liquidity in the market. You just dive into a level and then dive straight back out of it, which is very difficult to get in with any kind of signal indicator. So So that's the Aussie, basically looking more for shorts than longs. Canadian dollar, this one gets affected by the US, obviously. So there's, I think it's virtually every day, isn't it? So tomorrow we've got US news, US news, US news. Friday we've got PMIs. So basically the US has got news every single day. The Canadian has nothing but Macklem speaking. So with the CAD, it's just a case really of waiting to see what happens with the US news at the end of the day. So all the CAD pairs, basically, as you can see, again, we are sideways, gone absolutely nowhere since middle of November. We're just sitting, waiting. Got big propulsion gap to the downside. So if we're back up somewhere like this, looking for shorts, if we're sitting down here, flip a coin really. But that's going to move pretty much every day because the US is going to move every day. All the yen pairs, I wouldn't be looking for any buys against the yen at the moment. I would only be buying the yen, i.e. selling everything against the yen. That move was confirmation that the market is going to be happy about the interest rate rise, or rather coming out of negative interest rates for the first time in 6-7 years. Once they do that, it's going to power up. And this is evidence that that is going to happen. So we're on a pullback at the moment. So anything to do with the yen, I would be looking just for shorts. So you're going to use the news if you're going to start trading the yen to get into stuff. So US dollar CPI coming out tomorrow, short US dollar yen. Yeah, and if it does rally, that's fine. You can scale in and wait for the yen to move because the yen is definitely going to move, but not until next year probably. So these are kind of things you'd be taking for positions, but there's no yen specific news that we've got coming out this week. If you look at next week as well, we've got the rate coming out next week. They've just confirmed this morning that they're not going to do it this week. Yeah, so they've just said, we're not going to raise the interest rates next week, which is why the market's pulling back because they weren't sure as to whether they're going to do it this week. They're not. Mind you, what are the Japanese notorious for? Saying something and doing the other. So you never know. They could be a massive shock on Tuesday next week, but we'll see. Find out next week. So yeah, all these yens basically, they're all pulling back nicely at the moment. So I'd just be looking to get in short again on them, really, if you want to get into them. But I'm just not interested this side of Christmas. So I will wait and see what happens next year. There's opportunities every day. So no need to rush into anything. Swiss yen, obviously same thing. Your euros. So this week we've got the euro rate coming up on Thursday. The ECB have said that there is no interest in changing interest rates until early next year, probably Q2 next year. So January, February, March will be, as expected, 4.5. But if that inflation figure comes down any faster, they will be forced to move faster. So the euro has the lowest interest rate everywhere at the moment at 2.4. Target is 2. They're very nearly there, which is why they've got to start moving this fast. Because if they don't, they're going to go into negative inflation or disinflation, as it's known. And yeah, that's bad. Current contraction of your economy, GDP contraction, it's just bad, all bad. So they do not want to let that get too low too fast. So if we get another big CPI number come out, they would just drop that interest rate without warning. So the euro is a sell. So all the euros, basically, we've got loads of news coming out on everything else this week, but your euro news is focused obviously on Thursday, and then we've got the PMIs on Friday. So Thursday afternoon is when we're going to get that information. We've got Thursday morning as well. We've got the Swiss. The Swiss moves the euro, and the euro also moves the Swiss because they trade together. So you've got that one as well. No expected changes there, but you never know. So euro dropping, as you can see, across the board. Don't expect that to do anything but continue to drop. What I want is before Thursday to be out of this. So I'm hoping we get some weakness in the US on the run up to Thursday, which will weaken the CAD, which will allow this euro CAD to get me out flat. Otherwise, I've just got to manage it, which is going to be a pain in the backside. But anyway, but I don't see the euro any reason why the euro should pump. They are dropping the interest rate. So everything euro, you're looking for pullbacks into these areas to get in short. Yeah, everything. It's not going. It haven't gone anywhere. Last week we just got stuck, so nothing moved. Let's have a quick look at what the DAX is up to. Nothing. New movement. So euro US dollar. Obviously, this is one. Euro US dollar, pound US dollar are going to be the biggest movers all week because we've got interest rates coming out on all three, and the US dollar Swiss as well. So these ones basically, we just had the propulsion gap fill, return to origin on that initial move, which was the CPI. We're back there now, reset, so could go either way. Obviously, more likely to go down. However, we've got the US dollar potentially talking about reducing interest rates, or rather Goldman Sachs talking about the US dollar interest rate coming down towards Q3 next year. If we get the Fed come out on Wednesday and say probably a little bit sooner than that, that US dollar is going to drop hard. So this could well do that. So when I say, euro is a sell, if the US dollar is a bigger sell than the euro US dollar is obviously going to go up. So you've got to take both currencies into account. At the moment, these are the two that will probably start to reduce interest rates first. So it's a battle between these two to see which one drops the fastest and the furthest. But we've got upside propulsion gap there. So if we're up there, would be a nice short by the time the rates come out. We've got all this down here back in this accumulation. So look at it long term. We've had a decent pullback on that leg. I'll be looking for that to continue. So basically just the rollover on the euro US. But when, difficult to tell. Your pound pairs, obviously the pound rate is on Wednesday as well, Wednesday lunchtime. So, all of this stuff, you got everything you're trading on Thursday basically is going to go crazy. So we're going to get mental moves probably Wednesday evening, because we've got the FOMC statement and the press conference. Then you're immediately running into unemployment rate, which is going to move the Aussie and the New Zealand and potentially the yen. Then literally, as soon as the market opens, you're going to have the Swiss franc moving the euro and the Swissy, followed by the pound moving, and that also moves the euro. And then an hour later, the euro moving, which obviously moves the pound as well. And then 15 minutes later, you've got the unemployment claims for the US, which is probably going to do the opposite to what happened in FOMC. And then you've got the ECB press conference where Lagarde could implode the market again. So, from that moment on, you are literally in the lap of the news. There's nothing you can do about anything that you get into. So it's the sort of week, as I said, if you're position trading, no problem. But if you're position trading and you're happy looking to hold over Christmas, just don't even get involved. If you're going to hold over Christmas, it's fine. But if you're not going to hold over Christmas, just this week is finished. So all of these pounds, as you can see, pound odd, prime example, the pound is pretty stuck at the moment. Can't really find any direction anywhere. So this is a range bound pair. So you want to be taking trades from there or from there or from there or from there. Yeah. So look at the inside range, look at the outside range. Those are the areas you just want to be mean reverting if and when we get there, but we're not going anywhere at the moment. The pound interest rate isn't going to change on Thursday. We're 5.25. I mean, I say it isn't. None of this is, we haven't heard anything is what I'm saying. There's no plans to, and there's not even any indication of plans to. It's next year. We're not interested this year, next year. So there's very, very little chance of anything changing. But all these pounds basically are very, very sideways. Like everything, the pound will be weakening because interest rates will be coming down. But talk is Q2, Q3 next year, the same as everybody else. So at the moment, the market really has no guidance from anybody as to where anything's going. So look for propulsion fills. If we're up there on Thursday, be a nice short. If we're down there on Thursday, be a nice long, because the market's probably just going to want to use the news to profit take moves it's already made. So we're just waiting to see where the market gets to. Pound Swiss, totally sideways. New Zealand coming down. So New Zealand dollar is a lot stronger than the Aussie at the moment. But if you look at it on the grand scheme of things, we are in this range that we haven't really moved out of. So we're forming a nice big range here. We're approaching the lows. If we get down to those lows, nice little long. But there's no real strong direction on anything. Pound US dollar. This is obviously stronger than the US at the moment. Everything is stronger than the US at the moment. That could all completely flip this week. All of this news is basically fundamental shift news. So everything that you get into is literally, it's got a chance of changing direction this week. So if you want to get into any trades ahead of news, see if we're down here. If we can make it down here by Thursday, brilliant. If we can make it up there by Thursday, I'll be looking to do the opposite. But all stop loss related stuff. That's all you can really do. New Zealand dollar is the least impacted this week. The only thing we've got for the New Zealand dollar is their GDP. But they will be affected also by the unemployment rate in the Aussie. But with your New Zealand pairs, every single New Zealand pair, you want to be looking at the cross. So the Canadian dollar, New Zealand dollar CAD, that's going to move on the US. That's going to move on the Swiss rate, and the Euro rate, that's going to move on the US rate. The yen will just do whatever the hell it likes this week. So we've had a nice big run. Be looking for a pullback into propulsion on that one. So we're looking for some US dollar strength to drive that down. But equally, if that US dollar news comes out negative and we're up there, this could and likely will just probably go range bound for the rest of the year. That's what tends to happen. Totally sideways, New Zealand dollar Swiss. Again, range highs. If you get to any range highs ahead of news, if we find ourselves there 3 or 4 hours before the Swiss interest rate, just hit the short button, put a stop on it. Yeah, you've got people that will be looking to short that area. We know that. They've done it 3 times there. Get in with them. Yeah, if they're going to move the market down to make a move, be on it, because you're going to have the people that are making that move and the banks all doing the same thing at the same time. You're going to get those big ADR hits to the downside, aren't you? So just waiting and looking for any opportunities if you want to trade. But like I said, we all got to take a holiday sometime. Our industry takes off all of summer, and usually 2-3 weeks over Christmas. So difficult to pick anything, especially in a week like this. So New Zealand dollar, against the US dollar, obviously, we're down at support at the moment here. If we got to move down to there, long, but we've got that big target down there as well. Yeah, looking for a pullback on this and a retest of this area. But we'll see. It's all down to what the US decide to do with those rates and what they give us as forward guidance on Wednesday. Big target to the upside, New Zealand dollar CAD. Multiple targets to the upside, New Zealand dollar CAD. And we're just coming out of this propulsion area here. So it's up there or down there. Very difficult to pick a direction on anything to do with the CAD because of oil, which is, we had a 2-day rally on oil. I say a 2-day rally. We've had an up day on Friday and we didn't do anything there, but collapsed again. This 67 a barrel is kind of the floor at the moment. So if we can get back down to here, I suspect we'll probably rally from it, which will obviously increase the Canadian dollar value as well. So we'll have to wait and see what happens with this. But oil is in all sorts of trouble at the moment. So when you're looking at things like US dollar CAD, we've also got all the rates coming this week. We've got the PMIs coming this week. We've got everything coming this week. And then we've got oil potentially approaching a bounce point this week. So very difficult to sort of pick anything to do with this one either. But obviously all based around FOMC on Wednesday. So the likelihood is Monday, Tuesday, stuff like this. And then Wednesday will take off. But we might not. FOMC as well is very hit and miss, isn't it? US dollar Swiss, very, very sideways. The whole of last week, we didn't do anything. I'm out of it, flat. And US dollar yen, obviously, which we would be looking for shorts. But obviously with anything, if that rate, they come out and say, actually, we're going to reduce the interest rate in March next year, this will be down there. And then if the Japanese come out and say, we're going to increase our interest rate in January, this will be even further down there. Could be the opposite, but I would only want to be hitting the short button on this. The US dollar is going to reduce interest rates at some point, and that is going to weaken it. And the yen is going to increase their interest rates for the first time in 7 years. That is going to strengthen it. The only thing you want to be doing on this, as far as I'm concerned, is short. Gold, as you can see, has gone nowhere apart from that crazy move. There we go. So that's kind of what's happening this week, where we are with everything. But after last week and everything being very sideways last week, it's very difficult to pick any direction on anything, isn't it? So just got to kind of wait. DAX broken to the downside. So we haven't got the gap fill done. Are we going anywhere, is it? Big old wicks. Look, this is what this week is. Well, not this week, but what Christmas is like. Yeah, we got these. When the market goes quiet, you get lots of movement within candles, but no real direction on stuff. It's a bit like trading the Globex session on the US. Yeah, you get a lot of wicks, but you know, gone nowhere for half an hour. Moved up quite a bit. Moved down quite a bit, but didn't go anywhere. Just not fun. But yeah, a bit of a push to the downside. So we got gap fill potentially still in play, but anybody get into this morning? Franco, happy holidays. Red envelopes falling. Protect your bankroll. Yep. Be ready for a lot of slippage. Morning, Blue Trader from Pontevedra. Cloudy with a bit of rain. Thanks for subscribing, Christian. Welcome aboard. Is that Christmas decorations on the floor? Christmas presents? Christmas presents down there. A shoe. DAX coming down nicely, yeah. Tom hedged on the DAX, yeah. Will be if you took it today. Too tight today. Not enough room, not enough movement. You need the market to be moving and doing something if it's not moving. SIH on the UK 100 would have worked well today. What have I got? Got the FTSE. Axie's got the FTSE, I think. Can't remember. Very nice. Oh, no, that was yesterday. Yeah, still very nice. So there's your open. So pre-market, you would have got hedged, though. Post-market, short break. Very nice. Easy short break. So you got 1.5 hour at least there. But you would have been hedged on pre-market. Depending on size. Yeah, definitely would have. Definitely would have hedged the pre-market, but wasn't really a lot of movement this morning pre-market. So hence obviously not getting into the DAX. What am I running for range sizes? 10 and 20% min-max. So exactly the same as I did all my testing. All my testing pointed to less hedges on 10 and 20%. So if it's moved less than 10% pre-market, it's not going anywhere. You're going to have a very tight range. So one small move at the open is going to hedge you. And if it's over 20%, we've had a lot of pre-market movement. The chances are you're not going to be able to get a risk-reward ratio from the remaining movement because it's done a lot of movement pre-market. So therefore, it's going to have less in the bank to move after market. So that's the theory anyway. Not always the case, but you've got to have a range because you've got to have I mean, you can't have an opening range breakout strategy or any kind of breakout strategy without a range. That's what a breakout strategy is. You've got to have a range to break out of. So you have to have something. But 10% and 20%, I found in my testing was not so much the sweet spot, but it gives you enough wiggle room at the open, but it also allows the open to move fast enough to make you money. But at the end of the day, it doesn't matter what you use. You know, some days, let's say, for example, you used 5% and 15%. So today you are hedged. I'm not. Yeah. On another day where I've used 10.20 and you've used 5.15, you will get a 10R within 10 minutes, and I will just about get 1.5R. Yeah. So you will make a massive win when I will make a very small win. Yeah. Some days you'll be hedged. Some days I will be hedged. Yeah. There is no right and wrong. There's different. I keep saying this about every strategy you trade, every EA you use, every back test you do. It's not a case of right and wrong. It's different. There is no right and wrong in something that is random. You can't have a right and a wrong outcome from something that is generated at random every second. It's just different, isn't it? So if you take, like somebody else was saying in the Telegram group, they're going to take, instead of the 6 minutes, get rid of a spammer group. I take the 6 candles before as my pre-market because I'm looking for what is the build up to the open, half an hour before the open. Someone else was saying they're going to use an hour. So use 12 candles, which is basically the entire pre-market open on pre-market range on the DAX. Fine. There's nothing wrong with that. It's just different, isn't it? You're taking a break there or there, and you're looking for a range somewhere in there that forms a nice 10 to 20% area. So today, where I didn't get a pre-market, someone else would have had a pre-market range there. They're still hedged. Yeah. But if someone had been using a instead of a 10% minimum range, a 15% minimum range, their range would have been drawn there. And that person is short. They're not hedged. Not right, it's not wrong, it's just different. There is no right and wrong in something that's random. It's only right and wrong whether or not you make money out of it. Must be different brokers. Well, yeah, different brokers will be different numbers, won't they? Your broker will be quoting different numbers to me. To mine, if you're using a different broker, you're going to get slightly different numbers. So I got 130 on that, which is less than 136. If your broker had 3 pip higher spread, you'd have gone down a bit more and up a bit more. You probably would have put in a 136, 138. You'll be in it. You know, this is this. I keep saying, you know, the difference between a back test and real trading is vast on the 5-minute time frame. When you're back testing, and this is why the vast majority of strategies that are successful are traded on the hourly time frame and above, because in the hourly time frame, spread, slippage, and all the stuff that makes the difference between being profitable and not profitable is erased. It's irrelevant. It doesn't matter. If you get slipped on a news event on a 1 hour move, it doesn't make a lot of impact long term because you're looking for bigger movements. You've got bigger stops. You've got bigger targets. On a 5-minute candle at the highest volatility point of the day, the open, that spread and that slippage, and whether or not you've got 1 pip difference on your chart, your broker or my broker, makes a difference between a back test that went like that, going like that. Totally, totally different. You run a back test that has a high profit curve on a 5-minute time frame strategy, any strategy that runs on 5-minute time frame, and then rerun that test, but instead of using a 2 pip spread, use a 4 pip spread and see what happens to the profitability of that strategy. It will be destroyed on 2 pips. Because the difference between making profit and not making profit is whether or not it gets to your TP or doesn't get to your TP. If that spread is 2 pips wider, there'll be maybe 20, 30% of those trades possibly could not get hit target. Might be 5%. But if it's 5% and one of those 5% is the one that made 7% difference to the P&L of that back test, you don't get that 7%, which makes a massive difference to the profitability overall. All you can do is robustness test something and say, right, this looks like it's got a long-term edge because it makes money more than it doesn't. The amount of money is never, ever going to be the same. And it's going to be based on things like today. If that candle there was there, I would be hedged today with a $500 loss locked in because that candle didn't go to there, I'm not. That is that tight on the 5-minute time frame. Chop. We are trading algorithmic chop. Gold. I've just looked at gold. I can't really tell you what's going on with gold. What do you want to do with gold? You tell me. Where's gold going this week? So tomorrow afternoon at 1:30, it's going up or down based on the CPI figure. 1:30 on Wednesday, it's going up or down based on PPI. FOMC is going to move it at 7 o'clock, and then it's going to have a big run at probably about 8 o'clock when the press conference is over. Couldn't tell you this week. It's Newsweek. It'll be up there, or it'll be out the bottom somewhere. Or it'll be exactly where it is on Friday, but you'll have a load of that in the middle of it. I've no idea. This confirms for me why I don't trade gold. Yeah, that's just stuff like that. It's just ugh. Trade stuff you understand why it moves. Gold just moves for no reason. Well, we know why it moves because people are buying and selling it. But why did somebody buy an immense amount of gold there and then sell it back again? Morning, XRUpdate.news. Was watching a thing on CBDCs and loss of privacy and control. What's that? CBDCs? I don't even know what a CBDC is. You trade gold more than 15 minutes, you're brave. Yeah. Well, stupid. A lot of gamblers trade gold, don't they? A lot of gamblers trade gold. All the people that come in that do signals, they're all trading gold because you got violent, volatile, fast moves, which is great for gambling. Not for long-term trading, it's not. It's good for investing and gambling. If you want to do anything in between, it's just a lunatic. Central bank digital currencies. Oh, right. Yeah. Stuff's still going to move up and down. Gold moves because of fundamentals. Bart from Maras FX explains it a lot. Okay. Everything moves on fundamentals, not just gold. Everything moves on fundamentals. Weed Who Gates. Wed. XRUpdate.news. Are you having a funny 5 minutes this morning? Everything you're typing is making no sense to me. Weed Who Gates. Not going anywhere, is it? So I'm not in that this morning. So I'm not trading this morning. Nothing exciting for me. The Euro Swiss is, Euro CAD is on the move. Back up again. So this one, obviously, I've been in 1, 2, 3, 4, 5, 6. This is day 7 now. I just can't get anywhere on it because it's not moving anywhere. So, but hopefully we get some positive move on this ahead of Wednesday. But other than that, I haven't got anything else today. So I'll be back this afternoon and we will trade the US indices. World Economic Forum, World Health Organization, and Bill Gates. XRUpdate.news. You are just stating names at me. I have no idea what you're talking about. None of that stuff is important until it's important. You'll know it's important when it moves stuff. All I need is stuff to move up and down. I don't care why it moves. As long as it moves up and down, I can make money out of it. At the moment, as you can see, you can't make money out of stuff that goes sideways. Franco, we have a bot in the house. Oh, you're talking about XRUpdate.news? No, not a bot. Just confusing me. US dollar Swiss. I can look at that again. Yeah. I don't know where it's going. There's no point in giving you any any kind of analysis on anything at the moment, Rajiv, because I could say right now, at the moment, basically, as you know, from my perspective, being a mean reversion trader, there's nothing I can do with this. It's not extended, therefore I can't mean revert it. It's just had a big move up, the US dollar, or rather the Swiss franc down as well. And we've got that big CPI number to potentially go back to. So either it is going to go back to there on positive news for the US this week, or it's going to go down there on negative news for the US. Or the Swiss franc will reduce their interest rate and the Swiss franc will collapse, making that go up there. Or the Swissy will go, actually, we're going to increase by another one more 0.25%. Just because we can, and we didn't tell you about it, and we like mucking up the market, and it will collapse down there. But whatever happens on this week, on this instrument, is going to happen starting with the CPI number tomorrow on the US dollar. So every day this week, we have the US dollar, the largest currency on the planet that impacts every other currency in one shape or form, having a major fundamental news event every single day. Look at what drives this market, yeah? Interest rates, inflation, GDP, and unemployment. And look what we've got coming out this week for the US dollar. Inflation, interest rate, unemployment. Haven't got any GDP, but we've got PMIs, which is again related to inflation. So every single day this week, there is a core leading fundamental indicator telling us to do something different. There's just no way to forecast anything on anything. If you want to trade this week, hit the button, long or short, and hope the news goes your way. So US dollar Swiss, tell you what I would do. From a technical basis at the moment, fundamentals on this are, the fundamentals on everything are short. Everybody's going to reduce their interest rates, which is going to weaken their currency. Everybody's doing that. So if everybody's doing that, everything is a short against a short, which means that nothing has an advantage in either direction, does it? So right now, looking at technicals, we've got a massive propulsion gap to the upside. So I would probably hit the long button on this. And if the first news event drives it up, great. If the first news event drives it down by 1.5 ADR to 2 ADR, I would scale in at support and hope that the next news event drives it up, because my average would be there and then I could get out in the next news event. What would be perfect for everybody this week is if what happened was we had news events that caused the market to go in each direction multiple times, because it doesn't matter what you did, you would get out with a profit this week. But what we could have is negative US news, i.e. the CPI figure coming down, followed by them saying that they're going to reduce interest rates faster than expected, then having negative PMI figures, and the US dollar could be 700-800 ADR lower than where we are now. You see what I mean? Anything you do this week is either going to make you a fortune or blow your account. It's just a lunatic week to trade. And there's a possibility of less liquidity in the market because traders are taking time off. I know bankers that are off already because it's Christmas. So there's less volatility, less liquidity in the market, which means bigger moves and more slippage, which means more profit or more loss. But directional bias ahead of a news week where there are literally, I mean, how many are there? There's one, that's not one, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We've got 12 fundamental shifting news events this week. 12. No one on the planet can tell you where anything's going this week. Pound odd. ADR. So pound on the rally. So pound's pushing. No reason, just the pound pushing today. Yeah, I can't help you, I'm afraid. I have no idea where anything's going. Fair enough. Any word on that yen move last week? Saw something about Bank of Japan collapse. No. Where did you hear that? I can't answer that question because it's obvious. They stated in here why that news was. It was obvious. They're going to increase their interest rates. Bank of Japan came out and said, we're increasing our interest rates for the first time in 7 years. So the market bought the yen. Just had confirmation today, look. No need to do it in December, i.e. January, we're increasing our interest rates. Got to watch the news. Financial juice is your friend. Right, I'm going to leave it there. I'm going to position trade as normal over Christmas. Good man, AZ. Carry on. Good luck. If it's going to be low volume, that means I only have to look at it a couple of times a day. Low volume or low liquidity means huge moves. So just keep your eyes. The best thing to do, the best thing to watch during the Christmas period is ADR. The ADR dashboard, not the RSI. The ADR dashboard. Because this is going to... night, Franco. Franco's off. This is going to tell you when stuff's moving. So if you want any kind of alert, set up push alerts or email alerts or something for the ADR dash. Because when you've got light liquidity, volume and liquidity obviously are very different things. Volume is the amount of orders coming into the market. Liquidity is the available orders to fill that order, if you like. So if we get a load of buyers coming in and there is no sell side liquidity, the buyers will have to push price further to get their orders filled, which is what, the slippage. So you get quite often when there's no liquidity in the market, you get big ADR days because the market normally will find liquidity within ADR, which is why 58% of the time the market stays within ADR. We know that. The reason being is because there's usually lots of liquidity. So if I want to dump a load of orders into the market, there's usually people that want the other side of it. So we don't need to go much further than the average daily range to get everything done, all the business done. When there's not many people wanting to trade, there is a need for the banks to still get those orders done. If Microsoft tell me to buy 25 million US and sell 25 million yen, I have to do that because Microsoft has told me to do it. So I have to execute that order. If I can't fill the order within that range because there's normally enough liquidity there to do it, and I have to go that far to get Microsoft's orders filled, that's what I'll do because I've got to. It's not a case of, I'll leave it till January. The business needs a transaction done. So you get a lot of big ADR days, but you'll find that they'll be like that. It won't go anywhere. It will move a lot, and which is great if you're in it, but it's awful if you're using your stop loss because you'll get slipped all over the place and you'll get stopped out constantly. It's just a horrible time to trade. Pound yen, so this pound is rallying hard. The yen's obviously weak today off the back of that news. So pound being strong, yen being weak, perfect storm. This is going to move further than everything else. Where are the settings for doing push email alerts? They're in your settings in tools, options, I think it is. Events. No. Email. There you go. So you set that up. And notifications. Enable push notifications. So just muck about in there, basically. There's loads of YouTube videos and stuff which will tell you if you want them set up. But best thing to do, something else. Honestly. Right, so I'll be back this afternoon. No trades on the DAX this morning. Looks like it wants to go short. However, then that leaves us with a gap fill problem to the upside. But the rest of the markets obviously aren't moving because it's Globex session. But hopefully we'll get some movement on these this afternoon. So no news today. So today is our day off basically for news. So we'll either find the market is reaching for areas before the news, or it just does that basically today, which is probably more likely what it will do while it's waiting for the news, because they're not going to want to dump a load of orders in the market, speculative orders, when they don't know what's happening with all these numbers. So I suspect today you'll probably find a bit of a rotation day, and then we'll kick off tomorrow morning with GDP for the pound. So we'll see where we go. But as I said, watch support resistance areas. If we do get to any good support resistance, you're probably going to find you're going to get bounced today. So good entries, but yeah, so try not to get too exposed. Might be my naivety, but I'm not feeling worried about it. There's no reason to be worried about it, AZ. There's nothing to worry about. If you want to continue. I just like to have Christmas off, if possible. If I've got a portfolio full of 10 instruments that I'm trading, I have to watch that every day, multiple times a day. At the moment, I can pop in at the moment and have a look at the Euro CAD twice a day over the entire Christmas period. It's lovely. It's the first time I've had a proper full Christmas off. But, you know, thing you've got to think about is it's a normal trading week as far as fundamentals go. So the market is going to potentially reposition itself this week and change direction on some of this stuff, depending on what these numbers come out at. So it's nothing different to any other week of the year. It's just that when this week's over, you will be sitting there in drawdown, having nothing you can do about it for 2 to 3 weeks. It's not really anything to worry about, but it's just, you know, let's say, for example, you suddenly got this week down to 15% drawdown on the account. You've got to sit there for 15% of drawdown for 3 weeks. It's not much fun, is it? Euro CAD pumping this week would be nice. We'll find out when the news comes out. I would like it to pump 175 ADR by Wednesday. That would be absolutely perfect. Because then if Lagarde comes out and says that their rates are changing, I haven't got to worry about it. But anyway, we'll see. Right, so we're back this afternoon at 2:20. We'll trade New York. See if we can get some movement out of the New York session. And as I say, I'm just going to judge it by ear. If we get a really tight, crappy open at New York today, I'll try tomorrow. If tomorrow's the same, I'll jack it in for the year. There's no point in trying to shoehorn money out of something that's not going anywhere. So, all right. So have a good day. If I don't see you at 2:20 this afternoon, back tomorrow morning 7:50 for the Frankfurt session as usual. If anything happens that's important, I will put it in the Telegram group. But unless anything is moving, not really going to be anything to report. So, all right. So have a good morning. I'll be back 2:20, and I'll see you in the next session. Have a good day.